Everyone, welcome back. It's another episode of Masari's Unqualified Opinions. I'm Ryan Selkis at 2-Bit Idiots. Another great guest today, CEO of Dashcore Group, Ryan Taylor. Ryan, thank you for joining us. We're going to cover a lot of territory for sure, all things privacy and regulatory engagements, some recent releases to the Dash Core roadmap, and the general history and evolution of the project, because there have been a couple of twists and turns. Maybe that's as good a place as any to start, is around Dash's birth as a protocol. But before we even get into that, let's dive in, as I do with all my guests, just how do we get to this point with you personally, right? So background and what got you into crypto initially. Was it Dash? Was it Bitcoin? And then discovering Dash? And how did you come to play such a prominent role within this ecosystem?
Okay, great. Those are all good places to start. Well, first of all, thank you for having me on. I think we should be able to have a really good discussion on a lot of things, Dash and non-Dash. But yeah, to start, my own background, I am, as you said, CEO of Dashcore Group. Dashcore Group has around 35, 40 employees and contractors that work for us. And we're one of many entities that serve the Dash network. My background has always been kind of in finance and technology and kind of bridging the gap between those two worlds. I spent many years at McKinsey's New York offices in both their financial services practice as well as their business technology office, kind of straddling those two areas. Became an associate partner there and left to join a hedge fund, $20 billion hedge fund in New York. And we were focused a lot on fintech and kind of high growth industries. My own role there was in payments in particular, and a little bit of fintech outside of payments. And so I got very, very deep into payments during my years as an analyst. And that's where I first got exposed to Bitcoin. Back in early 2013, I started hearing about this strange new payment type that was facilitating, mostly at the time, illegal drug trades on the internet. And it was intriguing to me to learn more about how such a payment method could even exist, and started learning more about it. And I immediately identified the value in what had been created and started to get involved, just learning about it and then beginning to invest in it. And I also brought to that evaluation a payments expert's view of the technology, and assessed it to have a lot of deep flaws, despite the fact that it was totally unique within the payment space. And I started looking around at other projects once I realized there were other projects at the time, just to learn what else might be out there and whether there might be something that fit the payment space even better. I didn't find a lot. Most everything was a copy and paste of Bitcoin at the time, with maybe some parameters changed or a different mining algorithm or something, but they all fundamentally based themselves on Bitcoin. And I had trouble finding anything different from a consumer perspective or a merchant perspective or any other perspective that might differentiate these projects. And that's when I discovered Dash. And at the time, it was very focused on introducing a greater level of privacy, something that consumers might actually care about. And so that's when I started to get far more involved within the Dash ecosystem and project, and volunteering a bit of my time on the weekends to just share some thoughts.
And this was what year?
This was 2014. Dash was launched in January of 2014. I think I discovered it around April.
Okay.
And it just so happened that for personal reasons, I was moving to Arizona, and the project's founder was located here. And I just reached out and said, hey, would you be interested in meeting up for a drink or something after work? And we ended up meeting up and talking through the entire space and generating ideas and sharing my ideas about what the flaws might be that could be addressed. And I just got sucked down the rabbit hole. By 2016, I joined the team full time, quit my job at a hedge fund in New York, which everyone thought was crazy. And by early 2017, I had assumed the CEO role for the core group of at that time, mostly volunteers.
So let's talk about the early days of Dash, because it was originally Xcoin and then Darkcoin and then Dash in rapid succession, right? And you very rarely hear about teams or protocols in particular, pivoting focus. But you did have an interesting structure, a two-tiered structure between what are called master nodes and then kind of general nodes. And in addition, you had kind of an early hiccup with the launch of the network itself, where about 10% was insta-mined. I don't know exactly what you prefer, what your preferred language is, but they're just generally speaking, about 10% of the outstanding supply that will ever be issued was mined in pretty rapid succession at launch unexpectedly. And there was no relaunch. It was kind of discussions of it, but it more or less had the intended consequence of ensuring that the core team had some ongoing funding and treasury that they'd be able to pull from. And it also kind of seeded the early master node pool, I guess, for this system. So can you talk a little bit about the system design itself, how it was different, and then in particular, the initial launch and direction and how that evolved rather quickly in the first year of the project?
Sure. So in terms of the structure of the network, it's best, I think, to kind of draw a contrast with Bitcoin. Mm-hmm. Bitcoin, the protocol itself says that 100% of the block reward and 100% of the transaction fees that are collected all go towards one task. They incentivize miners to secure the network. And the original intent behind that was that the users themselves would be the miners, but with the invention of ASICs, or mining equipment that is specifically designed to mine Bitcoin and do nothing else, it really has become impossible for your average user to kind of play that role. And so today you have an environment in which, a handful of miners then are securing the Bitcoin network. Dash was the first project to really take a step back from that allocation and ask the question, is that the only thing we need to incentivize? And when you really honestly assess it, there are other things that add value to the network. There are those that are providing the infrastructure, that are running full nodes, keeping full copies of the blockchain, facilitating transactions, and that costs money. The second role is there are people that contribute to the growth of these networks by developing new software or new capabilities, or marketing it, or signing up merchants, or being an advocate, providing news and information. And all of those things really play a role in normal business, but they're not paid for by these early protocols. And so Dash intentionally broke up the block reward into multiple components. And today, and it's changed over time, today 45% of the block reward goes towards mining, 45% goes towards infrastructure. These are the master nodes that you referenced. Mm-hmm. And the last 10% goes towards proposals. This is anyone can put a proposal up to the Dash network to receive funding. And if it is approved by the master nodes, who each have a vote in a very democratic fashion, the highest ranking proposals pay out as part of a monthly cycle. And so projects like mine, Dash Core Group, we receive our funding from the network and deliver value back to the network with the innovation and software releases that we produce. And so it's a more equitable distribution of the reward to people that are providing value to the network. The masternodes themselves, anyone is free to run a masternode. The only prerequisite is that you prove ownership over 1,000 Dash. And what that does is it prevents any one person from controlling that layer of the network. And that's what allows for a lot of the more advanced functionality of Dash, such as instant send, which is instantly confirming transactions, private send, which provides a higher level of privacy to users that opt into that service. And a number of other security features like chain locks that basically eliminate 51% attacks on our network. So there's a lot of good things that you can do with masternode infrastructure. We're continuing to leverage them for new services. In our next release, they're going to store user data for applications that will be built on top of the network, and basically allow for that information to be shared between users. And we can talk more about some of the cool use cases that you can produce with something like that. So that's basically the topography of the network and what some of the things that really make it fundamentally different from Bitcoin. And we can drill down into any one of those.
Well, let's talk about the privacy element, because for a very long time, Dash was considered a privacy coin. Maybe still is. I mean, you can make the argument that privacy is a feature, and that ultimately most crypto asset networks will have privacy embedded. But the very name of the project changed in relatively short order from Xcoin to Darkcoin to really hammer home that this was going to be a more obfuscated transaction network than previously existed with Bitcoin. That didn't last long though, and I imagine a good chunk of that was for regulatory reasons. So talk a little bit about the evolution of the name, because structurally speaking, not much changed from Darkcoin to Dash, other than the name during that initial period of time, to my understanding. But what really drove that early decision, and how has that ultimately percolated through the community and impacted the development roadmap, if at all?
Yeah, so as you mentioned, the project launched as Xcoin. It was initially a fork of Litecoin's code base, which was part of the contributing factor between towards the difficulties with the launch, which we can talk about. And 3 weeks into the project, Evan Duffield, the founder, kind of announced on one of these early threads. It's tough going back in time and knowing that the network was like $3 million or something in market cap or some crazy small amount. These communities were very, very small at the time. And this conversation ensues that the first thing I want to do is introduce this concept of a masternode, and I want to use it to facilitate a greater level of privacy. What should we name this thing? Xcoin just doesn't sound all that great. And I think about 3 ideas were thrown out, and on the third one, it was like, Darkcoin, oh, that sounds cool, let's do it. And so this was kind of this small band of, freewheeling people that launched the coin and went after privacy as its initial function. And I think in retrospect, it's incredibly easy to point to that and say, what the hell were they thinking? But this was kind of a just experiment. None of these coins were worth much of anything, and they were kind of messing around, more or less. And the project really started to get traction in, say, April, May timeframe. It did get listed on a few exchanges, but the name definitely was a hindrance to getting wider adoption. That may not have occurred to them when they named it, but it obviously was a very concerning thing for a lot of the exchanges. And by the fall of 2014, private send was pretty much perfected. It was in the form that it's in today. It basically is the earliest implementation of CoinJoin in the industry. About a year before CoinJoin was introduced into Bitcoin wallets. Bitcoin Cash has them now.
CoinJoin being just basically a transaction mixing service, which allows you to set a transaction, have it split with a pool of other transactions, and then ultimately it's obfuscation through kind of crowd aggregation of different transactions.
That's correct. CoinJoin is a technique that can be applied to any transparent blockchain. Basically the process is you combine your transaction with other people's into a single transaction, and that makes it harder to discern the inputs and the outputs. And the way that our implementation of it works is it works a bit like a mixing service where it combines your coins with other users' coins in a very standardized way and returns those coins to you. It is possible to trace through with sophisticated software if the user hasn't gone through enough of those rounds, and it's always transparent to the receiver that mixed funds were used in a similar fashion to CoinJoin implementations on other networks. And so it does provide a higher level of privacy, but basically it can be analyzed by analytics software. We have done private send transactions on Bitcoin's blockchain just to show that the protocols themselves are identical. And that has helped with regulators to understand that. And we've made a lot of progress over the last year with concerns over private send and whether or not it meets the requirements that regulators have for transparency. And so in any case, by the fall of 2014, we'd started as a project moving on to other features, and the most prominent of which and most popular is our instant send feature. It basically confirms a transaction and makes it double spend proof, which makes it riskless to the recipient within about 1 to 2 seconds. I think it's about 1.8 seconds on average. And that makes Dash usable at the point of sale, where most transactions still occur today. And so that feature was actually far more popular. It was rolled out in the fall or in the spring of 2015. And at that point, between the issues with getting Dash listed on more prominent exchanges and with the diversification of the use cases we were going for in terms of, speed, in terms of governance and some of the other things that we were rolling out, it made sense to change the branding. And Dash really does kind of embody the idea of what we were going for, which is peer-to-peer digital cash. And so Dash is a portmanteau of digital and cash. And basically, it also evokes the speed. And so that was the reason for the rebranding back in 2015. And at this point, we've been known as Dash for about the last 5 years.
So there are other crypto assets that are much more liquid, that are much more ubiquitously available. There's also a growing movement and very obvious groundswell of support for stablecoins, whether they're programmatically issued like DAI, whether they're central bank issued like what we think we're going to see out of China, and maybe Libra if it ever launches. Even if not in its fully baked basket version, maybe a smaller USD backed version that might launch in emerging economies. The key is, it seems like cryptocurrencies that are focused on payments that aren't either Bitcoin with its network effects or stable kind of sit in no man's land. How do you view the positioning of Dash as a cryptocurrency, right? Forget, I know every protocol is different, right? But in terms of a monetary asset, how do you climb up the leaderboard, I guess, for lack of a better term, or how do you have any chance of competing when the two primary things that maybe matter the most for actual peer-to-peer cash would be either liquidity or stability, or ideally both, but certainly those two to start?
Well, I think that liquidity depends on your use case, right? I think that the type of payments that we're talking about are more the day-to-day type of payments that everyday users might make. And for that, we have plenty of liquidity. Dash is currently ranked 15th in the CoinMarketCap ranking, but we are almost ubiquitously within the top 10 on any exchange that we're listed on in terms of trading volume. And there's a few reasons for that, but Dash is definitely one of the most used coins. In terms of our transaction counts, those have grown every quarter for at least the last couple of years. We keep hitting records. Last quarter, Bitcoin Cash, Litecoin, all of these coins saw reduction in usage, and we grew even last quarter. So, we've just had this consistently growing set of use cases that we've been building out. We have a real strategy of use cases that we're going for. And we've really built those around strategies that we feel are the best use cases for cryptocurrency. And so we've really shown that if you can focus your efforts around use cases for which you're well suited and really devote resources towards building those out, you can have a great deal of success. At this point, I'm not really concerned about the growth. The growth has been very strong. And we've proven out a number of our strategies that are getting real foothold. In terms of our positioning as payments, I think that ultimately, if you're used for payments and you have a certain amount of volume flowing through your network, what it does is it raises the floor below which your price can never go. Dash's price cannot go to zero because people are using it to actually transact with each other on a daily basis. And if we can increase that flow, I think that we put a greater and greater floor underneath the price of the coin. There are use cases for which the day-to-day fluctuation. Yeah.
Who's actually using Dash? I mean, where have you seen the most activity? Because payment processors in Bitcoin, I just don't know where the traction's been, even for Bitcoin, especially in light of the growth in the stablecoin market more recently. And the fact that Bitcoin at least has kind of transitioned to, or at least the perception is transitioned so that it's digital gold, right? So it's actually not about spending anymore, for better or for worse. I'd be curious. I know that there was some, Latin American use case studies that folks within the Dash community had promoted pretty heavily. But sometimes if you're just going off of unofficial channels, fact and fiction are very, very blurry. And I'm curious from your seat where you're kind of most excited about the true volume and true commerce.
Well, I think there's three areas that we're seeing the most success and that we've really been doubling down on. The first is Venezuela. Venezuela is a market that has gone through an incredible period of inflation. There's a great distrust of government-issued currency. And they have a lot of knowledge in the general population about cryptocurrencies and their usage. The government is actually using their state-issued cryptocurrency, the Petro, and paying state employees with it, at least in part. They're forcing businesses to use it. For example, the airline industry must buy their fuel now in the petro. And so there's a growing infrastructure and growing knowledge within the country about cryptocurrencies. And they definitely trust it more than their own currency. And so that is an area where we've seen the most real world adoption. Thousands of merchants throughout the country accept it. And there are a growing number of users. We've had almost all of the growth in our wallet downloads have come from Venezuela. We've seen a 50% growth within the last quarter, just as an example, in the number of wallets. And most of that growth is coming from Venezuela. And so people there actually do use it. It solves real world problems for them. And it's not just the currency that's the problem. The infrastructure itself is a problem. People have difficulty getting their credit cards to even work. There are power outages that last for days. There are, making only their phones a viable means of transacting with one another. And so, we are down there understanding what the problems are and helping people solve them. A perfect example of this is a project that we did in last August with a small team of people in Venezuela. And what we did was we experimented in a mall parking garage, which isn't exactly the first place you think of when you think of cryptocurrency adoption. But the problem was very acute. People were attempting to get out of the parking garage. The parking fee was quite low. It's like $1 at these malls. But they could not pay with their credit cards in order to get out reliably. And so they would swipe their card. They'd have to wait about a minute or two for it to get rejected. They'd try it again. It'd get rejected. On the third try, they'd finally get out. And they would queue up for 45 minutes to an hour at peak times, waiting to go through the line. We even heard of stories of people at the back of the line just saying, how many people are in line? I'll pay for all of you. I just want to get the hell out of here. And so we set up a team to educate people on how to set up a wallet, how to get Dash, and how to pay by just scanning a QR code, sending it, and walking off and getting in the cars and leaving. And it provided real value to people. Before you know it, they've managed to sign up almost all of the merchants in the entire mall. And the people are coming back to use it again, and they're buying 10 parking passes all at 10 parking passes worth of Dash all at one time. They're using it in the mall. They're beginning to transact with it because they recognize the value that has over the card systems. And for the merchants, they're looking to hedge their bets. There are threats that Visa and MasterCard will pull out of the country. Cash is not a viable option there for a lot of different reasons. Mostly that people don't like to carry wheelbarrows of cash around, and it solves real issues for them. So it's also very low cost for them. So we're solving real problems there, and that's where we're seeing the greatest adoption. The other two that I'll mention briefly, one is remittances, and in particular back to Venezuela. Those two have synergies with one another. When we set up a remittance corridor or a new remittance service for Venezuelans living abroad to send money back home, it actually fuels the usage of Dash throughout the Venezuelan economy. And so we've set up those. One example of this is Cubabit in Mexico just stood up their remittance service. It's an easy to use web page specifically targeted at Venezuelans. They go in, they enter somebody's phone number in Venezuela, and they can send money back home very easily. And so we've set up these types of very easy to use for everyday consumers types of services that allow them to transact with Dash. The last one is traders. We've been enabling instant send on more and more exchanges, and we turned instant send on automatically in 2019. It's no longer optional. All transactions are instant send. We had to re-architect the way that instant send locking occurred on the network. And rolled that out in mid-2019. And through the second half of the year, we've been enabling more and more exchanges with the ability to accept instant send deposits and instantly credit the user accounts. Now, for traders, this is really valuable because you can begin to arbitrage between exchanges and use Dash as the mechanism to move value very quickly. And what we found is that we're capturing share from other networks that used to be the fastest. And so a lot of coins like Dogecoin or Litecoin used to have a larger share of this market, and we're slowly capturing it. We have a lot of large exchanges in the pipeline to get instant send enabled yet, but those network effects continue to grow. And the effects from that is this November, December, I started getting phone calls from some of the major service providers, to the institutions looking for Dash inventory. They wanted to borrow Dash to the tune of millions of dollars worth because traders that they serve want to utilize it, but they didn't necessarily want exposure to Dash. The issue is any large holder of Dash likely is operating masternodes and earning a return already. And so what they were offering was just insufficient. And what that's done is it's forced traders to actually buy Dash and hold it if they want to utilize its capabilities. And so as we grow that network, we anticipate that demand will continue to increase.
And let's talk about the economics for masternode operators for a while, because this is something that we've seen with other networks more recently, especially, I think Cosmos, this is true. It's true for Tezos. Many of the other protocols that are ultimately going to incorporate staking, you're essentially creating a game that encourages people to actually hold these assets for the long term because there's some type of yield, or at least advertised yield. I won't go into whether it's real or not, because it's the equivalent of a stock dividend. So, not really, but let's, for the sake of argument, say that people want to earn yield here. What are the economics for the master node holders right now, and what percentage of the network is staking if this is such an integral component alongside mining? In which case, Dash is probably more similar to something like Decred in this hybrid model versus just a strict proof of stake network like you're seeing with some of these other smart contract platforms.
Yeah, to clarify, Dash is a proof of work network. Consensus happens through proof of work and through mining. And so masternodes are not, they're similar to staking, but those are not the same things. Masternodes are paid for providing infrastructure to the network. Having 1,000 Dash and running a computer is not sufficient. You have to actually maintain these servers 24/7. There's a protocol called proof of service that ensures that you are up and running and operational and responding to the network. And you've got to be 24/7 for, over a week before you even get your first payment. And so what you're being paid for is for providing those services to the network. If you look at it in terms of yield, 1,000 Dash yields between the 1,000 Dash collateral requirement in order to operate a masternode yields you between 65 and 70 Dash per year in rewards for operating that masternode, assuming you keep that up and operational. Which works out to about 6.5% to 7%.
And so just to be clear, the inflation schedule then for Dash is flat, or how is the emission ultimately going to be determined long term?
The emission schedule,
because originally this was going to be a hard fork, or it was a fork of Litecoin, but then this new architecture that was added changed the game a bit.
Well, we actually forked off of Litecoin initially, but because of the stagnant development on the Litecoin network, we reforked off of Bitcoin's code base at a later point in time. And at this point, we backport all of Bitcoin's improvements, or at least all of the ones that are compatible with our network and our philosophy. We wouldn't incorporate something like redirect by fee because it's counter to what we're trying to do. But at this point, we are a fork of Bitcoin's code base, and we incorporate Bitcoin's backports to stay compatible with it to the extent that we can. But in terms of the recent introductions, we do drift further and further afield over time, and introduce new consensus mechanisms and some other things that would make Dash less and less compatible over time. But we're finding that most of those improvements we're still able to utilize. A lot of those are related to performance and scalability and things of that nature.
Got it. What are the high-level goals for this year with the newly released upgrade? I think it went live in December from Dash Core. Can you just speak through some of what's on testnet now and some of the areas that the protocol and project is evolving and where you want to take this?
Yeah, sure. So we released onto testnet our first iteration of Dash Platform. And Dash Platform is a new layer to the network that the masternodes will run. It's basically introducing a side chain that is meant to handle user data. And so it's a significant upgrade to the network that allows a developer to do a few different things. One, they can integrate legacy applications very easily into the Dash network without running their own node, without using some third-party service. They can directly connect to the Dash network through a decentralized API and do it in a very secure way. And so it basically makes integrating Dash a lot easier. The second thing it does is it enables developers to develop applications that leverage the Dash network itself. And what they can do is they can actually store the application data in the network and retrieve that from multiple devices. So I can build an application that sits on my desktop, on my phone, on my tablet, and the data will sync through the network for all of those things. And so what can you do with this? Well, you can do a few different things. One application that we're introducing initially as part of this is a naming service. I can create a username, and I can actually assign a profile with information in the network itself about me. The second thing I can do is I can create a payments application that leverages that data. We're introducing, the first application we're introducing actually is called Dash Pay. And what Dash Pay does is it allows a user to go in, create a username on the network, send a friend request to other participants in the network, and then accept those incoming friend requests. Once I accept a contact request from another user of the network, I can actually pay to the username instead of long cryptographic addresses. All of that should be under the hood. Your average user, your non-nerd, non-geeky payment guy, is not going to deal with these long cryptographic addresses. There's also a security component to that. Right now, if I want to pay you in Bitcoin, you have to send me your address. And then I probably need to verify that through some second channel. And all of that takes place outside of the Bitcoin network. It's insecure. And so we have processes and things that we do to try to secure the address from each other. And then I can actually send you a payment. And unless I want to reuse that address, which is not good practice for many different reasons, I have to repeat that process every single time I want to pay you. And so that's simply not a good user experience. What this allows us to do is connect once, verify each other's username once, and once we're connected, I can safely transact with you freely, send you payment requests, and so on. The other thing it allows you to do is, since I have a profile and I'm able to have a username, I can just go to a web page. I can type in my username, Ryan, hit the Pay with Dash button, and I can get a notification on my phone that says, hey, do you want to pay this amount to this other user and send your contact information, your shipping address, and so on, that they're also requesting? And I can say yes. and I don't have to type anything in. We're taking the friction out of the payment itself. And so this is a far superior user experience that we're able to provide that's on par with, say, Venmo or some of these other payment use cases. The other cool thing is I can actually create a wallet on my phone, my tablet, my computer, and I'll see the same information, the same contact request or contact list, because all of that information is stored within the Dash network itself. This has applications for invoicing. It has applications for supply chain management. We're creating data triggers that actually follow through the supply chain process, that as certain events occur in the shipment of goods, the issuance of an invoice automatically happens, or the payment of that invoice can automatically happen. So there's a lot of really valuable things that you can automate and do with this in a way that's very easy for developers to build on. And that's very different from smart contracts, because smart contracts, the code actually executes inside the network itself. That's both expensive and risky. If I have error in my code, that is unstoppable code, and we've seen what can happen when smart contracts are not written perfectly. And so we're trying to create a fundamentally better experience that leverages a lot of those same concepts.
Well, certainly ambitious goal. I think it's one that's shared by most projects in general, and certainly those not named Bitcoin and Ethereum. The question is always, how you get there. And what strikes me is the instant payments elements is interesting, and it seems to have some developing economy pickup, particularly in Venezuela, as you mentioned, and for the remittance use cases, potentially for inter-exchange arbitrage opportunities for traders. It seems like more and more that will be the expectation or the norm for different stablecoin implementations if and when they go live. So you're really banking on being able to onboard a community of net promoters that have some vested interest, some skin in the game, and ultimately making sure that their local community adopts Dash and ultimately creates somewhat of a circular economy around it. The other differentiating factor is the privacy element of Dash, and it seems to have kind of taken quite a backseat compared to some of the other initiatives that you're talking about, which seem to be much more broadly useful, but certainly a step away from privacy by default and some of the early aspirations of the project. How much of that is driven by just the reality that it's very, very tough to maintain a liquid currency that's going to have broad international exchange support if it's unclear whether the underlying tech is compatible with the so-called travel rule, which basically says you need to know your customer and you need to know both the originator and recipient of transactions into these regulated entities?
Yeah, great question. I think that, it's not that privacy has taken a back seat, I would say, to some of these other features that we're deploying. Mm-hmm. I think there's two things at play here. One, consumers say that they value privacy a great deal, but in practice, that's very infrequently the decision-making factor for them. Convenience, ease of use, those things always take precedent over privacy. And it's not that we don't feel that privacy is important. It just isn't a message that necessarily lands with most mainstream users. They care whether it solves a problem for them. We are advocates for privacy, though. We believe in that private send adds value. We also think that it should be optional. There are use cases, very good use cases, where transparency is actually preferred. Our own operations, as an example, we want people to be able to see that we have, that what we're doing with the funds and be able to validate that Dash Core Group is maintaining the addresses that we are with the funding that's been granted to us. And so, there are use cases for both transparency, public transparency, and privacy. And so we want to provide both options. What we aren't trying to do is optimized for privacy, because the technology required to do so has compromises in other usability areas, such as scalability, such as the type of devices that you can use those technologies on. They don't all work on mobile devices. The kind of ability to work in all jurisdictions is certainly one of them. And so, you know, I think that what we're not trying to do is compromise on other things in order to provide state of the art on privacy. We want an overall good user experience. Privacy is only one component of that. And so it's not that it's taken a back seat, it's that we've taken a very practical approach to privacy. This approach does not bloat the blockchain. It can work on mobile devices, and it can be utilized optionally, which, you know, fully addresses the travel rule concerns. It can be analyzed by third-party analytics companies, and we have several on board already that provide services to exchanges in Dash. And so it certainly is good enough to keep your nosy neighbor out of your business. They can't spy on you and determine what your balances are at any point in time. They can't see how much you're paid. They can't see how much is in your wallet when the change goes back from a transaction you do with them. And so we're providing that level of privacy, but we're not going to sacrifice the user experience in order to provide the absolute best privacy possible. And so it's just kind of that's our approach and view on it. As far as the regulatory stuff, it's mostly education. I think that we've been labeled a privacy coin, but when you analyze the technology and whether or not you can meet the travel rule requirements, there's absolutely no differences between our network and Bitcoin's network in terms of the protocol around transactions. You can do, they're mutually identical transactions. If you can do a transaction in Bitcoin, you can do it on Dash. And if you can't do it in Bitcoin, you can't do it in Dash, and vice versa. The rules are identical. This is a privacy technique that can be applied to any transparent blockchain. And it does it in a very efficient way that allows it to scale. And so that's why we've selected it. I think that the label between privacy coins and so-called non-privacy coins is an artificial one. All networks provide some level of privacy depending on how you use it. And they're changing all the time. Lightning Network, Mimblewimble on Litecoin, these things alter the privacy functionality of those networks in very fundamental ways. And it's unclear to me how you even can draw a straight line from one to the next. It's not even a continuum. It's multi-dimensional in terms of the type of privacy that's provided, the ability to analyze that, the ability to transact in a transparent way. They're all not, you know, you can't compare these things. And so I think it's more about setting the rules and determining how exchanges can comply.
Well, you mentioned a little bit earlier that you've gone from 3 million in market cap at the kind of very earliest stages, along with the rest of the crypto market, over $1 billion now in terms of liquidity. So, or in terms of market cap, and obviously quite a bit of liquidity on the major exchanges because of that sizable network. Delistings are one potential risk. Maybe it's an education issue and just kind of general accessibility issue. But it's certainly not a negligible one of importance as you see exactly where the dividing line gets set by regulators in the next couple of years as the FATF travel rule requirements and guidelines come more into sharper relief, not just for you, but for the other privacy coins, Zcash, Monero. And for Bitcoin, right? I mean, exactly what level of privacy is going to be tolerated on these networks. But I guess if you take everything that we've talked about, the fact that Dash is pretty stable if you're in Venezuela, but it's not going to be as stable as stablecoins. It's pretty liquid, pretty widely used or accepted now for payments. Still doesn't have the ubiquity of Bitcoin, and maybe Lightning Network siphons off some of that demand. It's interesting for traders, but then again, arbitrage techniques, regardless of what asset you're using, are becoming a little bit easier and cheaper to wrap your head around. So it seems right now, not to be critical or sound like I'm bashing the project, but it sounds like Dash is very much second or third best across a hodgepodge of different features or components that I think would make a really valuable ecosystem. What do you think you're best at? And then I'll reverse the question a little bit, because maybe it's more illuminating. If this project were to fail, or if you were to lose your momentum and ultimately slide down the rankings and liquidity came down, what do you think would be your undoing as a project? Looking forward like 10 years, Dash has failed. What happened?
Well, I'd like to respond to some of the assertions there about, our position. If you're looking at the market as global, and that's what you're trying to quantify, that's one way of looking at it. Go to Venezuela and experience the differences in terms of people's opinions, in terms of how they use cryptocurrency. We collect data from payment processors. A lot of merchants accept Dash directly, but a lot of the larger ones, like Traki, that's their equivalent of Walmart, right? It's the largest retailer in the country. They have 34 locations and they're all superstores. And so we see the data. There's only two cryptocurrencies that are used. And we collect that data from XPay, we collect it from point of sale systems. We have individual merchant addresses that they've shared with us so that we can kind of track what's happening on an ongoing basis and see the activity level. Crypto buyer, there's a number of different service providers down there. And what we see is that Dash is used every bit as much as Bitcoin. And the exact volume that month or the exact transaction count, one might get ahead of the other from month to month. But we're really winning in Venezuela and we're growing there faster. And so I think that people there are network effects within a geographic region. If I know that more merchants are going to accept Dash and I know that the user experience is better, I'm far more likely to use that. And so the question isn't whether or not we're going to be the largest on a global scale. The question is, can we carve out a base from which we can grow? And I think that Dash has a far better strategy at doing that than networks that don't have entities like Dash Core Group or the dozens of other projects that are solving real world problems on the ground. A lot of these other projects talk about what's going to happen in the future, but they aren't incentivizing the right behavior. They aren't incentivizing teams on the ground in Venezuela. They aren't paying people to go out and be advocates and educate merchants and sign them up and service them with a call center like we do. And so I think that my ambition is not to overtake Bitcoin in the next couple of years. That may be absolutely impossible. My aim is to create the ecosystems in which we're solving real problems and have us be the leader there. From there, we can expand out into adjacent industries, adjacent geographies, and continue to grow that base of real world problems that we're able to solve. And so what you've seen is that Dash, using this strategy, has had more consistent growth. In quarters when other projects are shrinking, we continue to grow. And I think that that compounding effect will take hold eventually. We've seen wild price swings over the last 3 years, both positive and negative. Mm-hmm. But as the activity on the network continues to grow and grow, I think that it's kind of a problem that resolves itself. And the question isn't just what is your growth rate, it's where are you growing? How are you growing? Are people using you or speculating on you? And I want more users than speculators.
So maybe the answer to the second question, I'll re-invert it, I guess. If Dash were to fail in 10 years, it's the answer to the opportunity for growth is the same as, what if you don't? And that is, how do you extend the very focused efforts in Venezuela so that you can fully penetrate the market or be competitive with the petro or whatever fiat currencies are available and Bitcoin, or whatever stable coin might be issued there at some point in the future. And that's only really phase one. If I'm understanding you correctly, focus on Venezuela and then ultimately find the next area of focus, whether that's a market or an extension of services, kind of further into that economy in particular.
Yeah, I mean, when Bank of America launched Visa back in the 1960s, they didn't do it across the country. They did it in Fresno, California, a small city. And they blanketed that city. They signed up every merchant they could. They signed up every customer. They gave they chose that city because it had the highest concentration of Bank of America customers in the country. Mm-hmm. And they gave everyone a credit card, regardless of their credit history or their bank balance. They gave every consumer a credit card. And they grew from there out to the rest of California initially, then out to the rest of the country, and then they grew internationally. And so concentration is very important in introducing new payment mechanisms. I don't see any other projects really focusing on use cases that they can build out from. They've got a lot of volunteers that all have different ideas about how it can be used, and they aren't getting critical mass in anything. And that, I think, is what is going to lead to failure. I think if you lose focus and you focus on the wrong things, or try to get people to use something that doesn't really solve a problem for them. I see all kinds of projects trying to get users in the United States. For what? We don't have a payments problem here in the United States. Our currency is pretty stable, so the store of value thing doesn't really resonate. Even Bitcoin itself is basically a speculative bet. It's not that people are truly looking to store value, it's that they're hoping it will go up. And so I think that long-term success is going to be determined by use. It's not going to be determined by a highly fragmented set of services that basically nobody uses. I think that the approach being followed by a lot of projects is just very fragmented and not very useful to anyone. And so to ask the question, what could lead to Dash's failure, it could come from competitive growth. There are other projects that are larger than us, and at least in terms of market cap, and if they really got their stuff together and hit on a strategy that worked, they might have the ability to grow faster. We don't have ICO money. We have kind of a trickle of money that comes out of the network every month. And so, it's possible that someone else simply invests faster and is able to take the lead position in some of these markets that we're targeting. But I think that as this market matures, I think that approaches like ours will tend to be the ones that rise to the top. That's my hypothesis on it. Looking at the introduction of many new payment methods over many years. PayPal is another example. They took a very concentrated effort on eBay. They just wanted to win eBay. That's it. And from there, they were able to do small merchants outside of eBay. oftentimes the same merchants that we're selling inside of eBay, expand out to medium-sized merchants, and now you go to web pages, even the largest merchants have PayPal. And so we really are focusing on that base from which to grow.
Well, so far so good. Obviously, any team that's been able to propel forward an asset that's still over $1 billion in value, in spite of the multi-year bear market in assets not named Bitcoin in particular, it's an impressive undertaking. So, where can people find you, Ryan, and get involved with the project if they'd gotten interested and would like to be part of a targeted solution for the crisis in Venezuela?
Sure. So if you're interested in learning more, a great place to start is dash.org. At the bottom of the page and in some of the sections, there's links to many other assets, including chat, community chat type forums, our own hosted forum, links to our Telegram group, all kinds of different resources that you can get involved with the community. There's a ton of information there. Dash Nexus is another great place where you can kind of see the proposals that the network is considering and voting on in any given month. That's dashnexus. I can't remember if it's org or com, but I think there's links to that on dash.org as well. And so you can really learn a lot about what we're doing. We also hold quarterly calls similar to a public company. Dash Core Group hosts a quarterly call every 3 months. We actually have those generally come out about 4 weeks after the end of the quarter. And we provide full financial updates on network activity, updates on some of the integrations that we've been working on, and so on. So a lot of great resources out there for information.
When is the next one?
Next one is tomorrow morning. So by the time this airs,
it'll be last week. Yeah.
Yeah, but we do have recordings of those, so you can go back to prior quarterly calls and listen to those on our YouTube channel. Links to that are also at dash.org, and that can get you up to speed fairly quickly.
Excellent. Well, Ryan, thanks for taking some time and telling us a little bit more about the plans and history. Definitely wish you the best of luck. And thank you to all of our listeners, viewers, whoever's tuned in for this entire conversation with Ryan Taylor. So until next time, be good. Peace.
Thank you.